Hey, what's going on everyone? I wanted to make a quick video here to talk a little bit about a trading technique that allows you to maximize the profits while still using the same exact trading strategies that you're already probably using to trade. And the technique is called position recycling, or pretty commonly just referred to as recycling or recycling shares. So I'm going to talk to you a little bit about what it is, how you can do it, and give you some examples of how much it can actually increase your profitability as opposed to just doing a basic buy and sell or short and cover type of trade. So first and foremost, while you're recycling shares on the long side, meaning you're just buying and selling as opposed to shorting, this allows you to profit from the stock's small price fluctuations rather than just buying and holding through the overall trend. So if we're looking at the example down at the bottom, you have a typical trade and then you have the example of a recycling trade. When you're doing a typical trade, you would buy, say for example, you're just buying at support down there, and stocks, as we know, don't just go straight up and straight down. They're going to have pullbacks and they're going to have bounces every once in a while as well. So if you're in a typical trade and you're simply trading the trend, and in this case an uptrend, you're going to hold through those pullbacks and eventually sell into some resistance, or sell when you think the price is likely to reverse back down or have a stronger pullback than you're comfortable holding through. Now, the other way that you can actually trade this, and that's going to be position recycling, can actually allow you to profit from those small pullbacks while still holding your main position or your core position, and without having to take on any extra risk either. So in this case, you would simply buy down there again at support. Once your position becomes a little bit profitable and you're thinking it's going to start to pull back a bit, you would sell some of your shares, not the entire position, rebuy those shares back again once it starts to pull back and dip, again sell some of your shares once it bounces up, and so on and so forth. And that is really the basic, and really that's the basics of position recycling. Now you can also position recycle on the short side of the spectrum. So for those of you who may not know, short selling, or just mostly referred to as shorting, is something that allows you to profit from a stock moving downward. Okay, so just like when you buy and sell, you still want to buy low and sell high. But in this case, when you're short selling, you're going to sell high first, and then later on, you're going to ideally buy back at a lower price and still profit the difference between where you bought and where you sold at. So just like when we're buying and selling, you can of course still recycle shares when a stock is downtrending and when you're short selling that position. The only difference is instead of buying, selling, and then rebuying, you're going to short sell, cover, and then re-short, and so on and so forth. Now I want to give a quick example on the profitability of a typical trade when you're holding through the pullbacks, as opposed to a recycled trade when you're buying and selling more frequently and you're actually taking advantage of those small pullbacks and adding it to your overall profit in your core position. Now if we're going to look at the example down at the bottom that I have drawn up, this is just going to be a typical trade once again, and we're going to start with buying 1,000 shares at $8 per share. And that is represented on the chart at the bottom, of course, with the green circle, also with the number 1. And then later on, we hold through some pullbacks, and we see that it starts to top out a little bit, and we decide we want to sell all 1,000 shares at $8.40, giving us a 40-cent per share profit on 1,000 shares, which of course is a $400 profit on our position. Okay, now moving on to the recycling shares example. So before even diving into this, I want to make sure that you realize these are the exact same charts. So if we go back here, you can see this is the same chart as the one that we're going to recycle the shares on. The only difference is, again, we're going to be profiting from the small pullbacks and trading them more frequently than we would with a typical trade when we're just buying and holding through the overall trend. Now, when we're going to recycle shares, we're going to start off with the exact same position as we did with the previous example. So we're going to buy 1,000 shares down there at number 1, which is at $8 per share. Then what's going to happen is the position starts to move in our favor a bit. We're up about 15 cents per share, and we decide we want to take off some of our position. So we sell half of our shares, 500 shares, at $8.15, and that gives us a profit on that trade of $75, because 500 shares sold at a 15-cent profit is of course $75. Then what happens is the stock starts to pull back a little bit, and we're going to add those 500 shares that we just sold back onto our position at $8.10, of course, 5 cents lower than where we just sold. Now our average is going to be at $8.05. Okay, the reason for that is because since we sold 500 shares from our original position at $8, we then only had 500 shares at $8. And then once we buy 500 shares back at $8.10, we now have 500 shares at $8.10 and 500 at $8 even. So halfway between that is of course $8.05, making that our average cost per share on this trade. Okay, then once the stock starts to reverse back up, there at number 4, we're going to again sell 500 shares to lock in some more profits. And this time we're going to take off $100 in profits. And the reason is because we're selling 500 shares at a 20-cent profit from our $8.05 per share position, giving us again a $100 profit. And again, the stock pulls back. We buy 500 shares more at $8.15. Our average is now $8.10. And last but not least, we get a final strong move up, and we decide we want to sell our entire position now just to get all the way out. And we sell all 1,000 at $8.40 for a $300 profit, making our total profit on the trade $75 plus $100 plus $300, $475, as opposed to just holding through those pullbacks and holding through the overall trend where our profit is only $400. So it's the exact same chart. We're starting at the exact price of $8 and finishing at the exact price of $8.40. But because we're taking advantage of those small price fluctuations and the small pullbacks and bounces, it's going to allow us to add an extra $75 in profit to our overall position into the trade. So you may be thinking that might not sound like too much, and it might not sound like it's worth it for the extra trading that you have to do. But you have to keep in mind that this is a very small scale example. We're only trading 1,000 shares of an $8 stock. And on top of that, this is an example with pretty low volatility. So for example, you could also be trading 1,000 shares of stock at $8, and then instead of selling 500 at $8.15, maybe it spikes all the way up to $8.50, and then you rebuy at $8.25, and then it goes up to $9 and you sell half. There's a lot more volatility often in the general market than there is in this example. So trust me when I say that learning how to recycle your shares is something that you definitely want to do, and it can add a lot of profitability to your trading once you get the hang of it. Now, a few things to keep in mind about recycling shares is that because you're buying and selling so frequently, you do need to be able to day trade as much as you want and have unlimited day trades. So if you're somebody that lives in the United States and you're under the pattern day trade rule, really the only thing I can recommend for you to do if you're looking to start recycling shares is to, of course, save up and get yourself over the $25,000 limit to be able to day trade as much as you'd like, or to look into maybe opening an international trading account, which will allow you to legally, of course, avoid the pattern day trade rule and again trade as much as you'd like. I have one international broker that I've used and that I actually recommend to a lot of people. Link down below in the description. So make sure to check that out if you're interested in looking into an international account to avoid the pattern day trade rule.